Bank reconciliation. So bank reconciliation is is prepared periodically to explain the difference between cash reported on the bank statement and the cash balance on company's books. So um, so you keep or you deposit or you save your money in the bank, right? So every changes happens for your cash, your accountant records for you uh, in your book, right? But also the bank will record the changes in your money in the bank statement. Okay, uh, but both of these records usually are not the same. The amounts of the money that are recorded um, in these two reports are different. You will understand more later, but I would like to say that usually the amount in bank statement and in your book, they are not the same. Yeah, that's why we have to make bank reconciliation. Bank reconciliation is like a process or an effort for you to make both of these records become the same. Okay. Okay. The balance of a checking account reported on the bank statement rarely equals the balance in depositor accounting records. Yeah. So the balance of your money in the bank statement rarely equals, usually not the same, to the balance in the depositor accounting records. Okay. So so we have cash balance per bank and you have cash balance per book. Cash balance per book means the ending balance of your cash in your book, the one that recorded by your accountant. But cash balance per bank is the ending balance of cash that that is reported by your bank in the bank statement. So you have U plus collection minus uncollectible items and plus minus errors. Then you get adjusted cash balance, and then for the cash balance per bank, you need to plus deposit in transit minus outstanding checks and plus minus errors, and then you got adjusted cash balance. So these amounts will be the same later after you reconcile. Okay. Illustration of a bank reconciliation. We follow 9 steps in preparing the bank reconciliation. Actually, you don't need to remember all of these steps, but you just need to understand. Yeah. So let's see. So you have cash balance per bank. Okay, the ending balance of your money that is recorded by your bank, and then plus deposit in transit. So deposit in transit means, for example, you have an international customer living in Malaysia, and then for example you ask them to transfer the fee to your company, to your bank account. uh, for example, they transfer the money at on Friday, okay, at 3 p.m. okay, and then Friday 3 p.m. Friday 3 p.m. okay, but at the end of the day, which is Friday, on Friday 4 p.m., your boss asks you to go to the bank and check your balance of the cash. But you know what? International transfer money usually cannot. You cannot receive the international transfer money within 1 day. Usually takes 2 or 3 days normally. Yeah. So when you print the bank statement on Friday, the same Friday at 4 p.m., the money that you should receive from Malaysia will not be recorded here. Okay, but in your in your bank book, in your book by accountant, you already plus here the money that you receive from Malaysia, because your client from Malaysia transfer the payment slip, the invoice to your email. Okay, so that's why you manually record cash on the debit side, but your bank not recorded yet, because the bank still not receive the money. The bank will receive it on Monday or Tuesday next week. So you have to manually record plus deposit in transit. Okay, the money is still in transit, right? And the next, minus outstanding check. Okay, the outstanding checks, for example, you issue checks, you want to pay to your supplier like now. Okay, you want to check, you issue checks to pay your supplier now, and then you issue check, you give to your supplier. In your book account, your accountant will record cash on the credit side, means that you issue already check to your supplier, but your supplier can exchange the check to the bank at any time they want. Okay, for example, after you issue the check, your boss asks you to print the bank statement from bank, and then you print it. You will not see any cash on credit side for the check that you already issued just now. Okay, because your supplier not yet exchanged the check to be money, so your cash still not deducted, right? So you have to manually reconcile your bank account. So you write minus outstanding check. Okay, and then if any errors, plus or minus, and then at the end you get adjusted cash balance. Okay, so I'm going to continue to the next slide after this.